Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. Data this morning was poor. PMIs across the board from Europe, the UK, and the US all missed. All came in worse than expected, yet the market did rally. Early on it rallied. Overall, jobless claims too were bad. So that relief rally did stall out on news that Gilead's miracle coronavirus drug, the treatments, they flopped. So really, the market, remember, rallied sharply last week on hopes that there was a treatment that was viable. So some of that wind came out of the sales here in the market. And although the S&P did trade out above 2806, it did not close out above there. And I got an interesting fact. Someone told me today that 5 stocks in the S&P, Apple, Amazon, Microsoft, Google, and Facebook compiled 21.5% of the S&P's market cap. Remember, Facebook had a huge day yesterday. And the last time it was this high was 18.5%, and that was right before the dot-com bubble. So yes, there's leadership, but there is a lot of weakness out there in the S&P 500, and that's not a great sign for a healthy move higher. Let's take a look at the charts here, and ultimately, I do want to point out where this market did stall today. So let's go ahead and take a look at this. S&P here first. You see here this sort of battleground area. This is the 2800. We got back down below there today. This was all intraday. This is not where the market closed. We did not close out above 2806. You can also take a look at this volume profile. This is where all the volume is traded during where this chart shows. So 2787, 2785. This was, remember, that settlement price going back to last Thursday, and where the market gapped down through. It gapped out above last Thursday, gapped down through earlier this week. And again, we're right back here. This is going to be a battleground heading into the weekend. So tomorrow, watch this area. But we stay suppressed. Where this market set closed today, 2780, it should open the door for some additional weakness. This right here on a daily chart is a big tail. And again, look at this here in the daily. You have this trend line from the lows, and here's that tail today. We stayed below this trend line. So again, the door is open for the bears to capitalize here to finish out the week. And you take a look at the Nasdaq. The Nasdaq, same sort of battleground area here. We moved out above, big tail left here in the session, 86.92. That was the settlement going back to on Monday before we opened up lower. So there was some resistance there, aligning with that 2806 in the S&P. And the market did not close out above there today, opening the door for some weakness. But early on, we did see it was the energy sector was holding well. A stable energy sector allowed for the market to move up, and there were some hopes too that Europe, the EU, would come together for a plan for making a bad bank, and that sort of fell apart too. We'll take a look at the Euro chart here in just a little bit. But overall, again, as the session developed, it sort of stalled out. A lot of early enthusiasm, stalled out late, and again, I think looking at the big leaders, they're going to matter here. And where do those leaders from Apple and Amazon, Google and Facebook and Microsoft, how do they finish the week? And if they finish on soft footing, the other part of the market that's showing such a little more weakness or such a laggard is going to weigh heavy on the tape. So keep an eye on that. We'll put out some new levels tomorrow morning. But again, the 2787 area is going to be a big battleground here heading into the night. But again, we did not close above 2806, and that's a big thing too to keep in mind. Let's take a look at crude real quick too. The June contract, there is a little bit of a trend line here that is rallying. So again, we don't trade off trend lines, but this is showing you there's some upward momentum. We get down below here. The market is then going to stay a little more suppressed and opens the door for additional weakness. What can keep the market from being weak? Well, here's the December contract. This is the December contract. You see a big battleground area, $29 to $30. That's where all the volume has been here much of this week. And that's going to be an area that if December is going to be stable, it's got to stay stable near $30. It's going to become a psychological area. And then gasoline, that left a huge tail today in gasoline. So keep an eye on gasoline tomorrow. High of 74.55 in gasoline, and a low today on a close of 74.36. So we are seeing gasoline about 10 cents off the high. That's something to definitely keep an eye on. And then one thing we've been concerned about, we love gold long term, but we're concerned about deflationary headwinds due to the energy sector. So if crude's going to be weak, does that weigh on gold? So this has been a great week for gold. we've been bullish bias in our morning express. Gold is traded higher. Obviously, we covered this inverse head and shoulders earlier in the week. It's a great chart, but I wanted to add this trend line here that gold did get below and started to sell and that on early part of the week, but it did hold. And then where we battled back, it's now resistance. It also aligns with the previous highs. So our narrative in gold does not change. You do not want to be buying gold when everybody's screaming for it. That's when you want to capitalize on gold that you already own. So don't forget that. And then silver is going to play a could be a headwind here because silver stalled out today. And again, the 50-day moving average up in $16, but we couldn't get there. Stalls out today. This is the 382 retracement, 15 and a quarter. We've been looking at $15, 15 and a quarter in silver to be a bit of a battleground area for silver. It's got to hold that. We start getting back below there, and especially you don't want to see silver below $15. It's going to weigh on gold, so keep that in mind. We like silver. We like silver in a long-term idea, but it's got to close above that 16.15 area, 16.10. And when it does, you could see silver potentially. I wouldn't be surprised to see silver gain $1 or $2 over a 24 to 48 hour time frame if it can close above that 50-day moving average. And that is what's going to bring gold to 1900. So keep that in mind. But gold needs silver to join along. And then let's go ahead and cover the currencies here because we did mention that the EU did not put together a bad bank and there's still a lot of uncertainty out there. This is a heck of a downward trend area that it's contained the euro going back for more than a month. This is March 9th. So for more than a month, the euro rally attempts have broadly been stalling against this trend line. Again, we don't trade against trend lines, but we help to define a narrative with trend lines. And now we are below, once again, below this area from early part of April. And the sustained price action below here, we believe, opens the door down to about 106.5 in the euro. We have been bullish. If you listen to some of the TV spots that I've had, always talking about that the sell-off in the dollar has been very shallow in recent weeks, given the extravagant stimulus measures we've seen. So the dollar, we like the dollar. We're long the dollar. We think it is going to go higher. We think there's some weakness to come here in the euro. So keep that in mind. And then lastly, let's take a look at the Aussie. The Aussie has been defying, gravity in a sense. A stable energy sector today has helped the Aussie come back. There's also a belief that Asia was the first area to have the coronavirus, and it's going to be the first one to come out of it. So the Aussie dollar is a good pulse on China, on the Asian economy. So that had a good day today, but there is a reason to believe it's going to stay contained here in the Aussie dollar. You also have a 618 retracement that is a resistance level. Now, if the Aussie closes above this trend line, and then it closes above about 64.50, 64.60 area, that's going to be bullish. But until then, we actually like selling the Aussie, looking for this thing to start fading out here. Keep that in mind. So again, today was the big data day. We're through that poor data, but again, the market rallied, good relief off of it, but it did finish poorly due to other news, due to soft footing potentially too. But tomorrow, there's not a whole lot of data. You got UK retail sales, out of Germany, you do have business climate data, and then U.S. durable goods, and then final Michigan consumer sentiment. So yeah, I guess it is a pretty good chock full of data here to finish out the week. We're going to see a lot of news. What's going on in Washington? The House is voting on that bill, additional stimulus for small businesses. So a lot of news here to finish out the week. Give us a call. We're here to help. Anything on the board, 312-278-0500. But remember, futures trading involves substantial risk of loss and is not suitable for all investors.